Hello and welcome back to another episode of Finance Agents Live. This is episode number 37. Today I am joined by David Crantz,
Good morning,
President
everybody.
and founder of Lendterra. As you know, we have an exclusive lending partnership with Lendterra for our private money real estate loans. It's been a great partnership with us. And as sort of an update, you know, some of the shows I've done with David have been some of our most popular shows. I don't know. I don't tell him this too much because he doesn't need any encouragement on his ego. I'm just kidding. No, but his shows have been good and people like what we have to. We're doing some cool stuff. So today, what I thought we'd do is just kind of go through the last 10 deals that we funded. And you guys can start to get an idea on what types of real estate we're financing. If you're new to the show, please like, subscribe to us on YouTube. If you're on Facebook, subscribe on YouTube. We're at youtube.com/financeagents. With that said, we'll go ahead and jump right into this. We're going to be going over 10 deals that we have funded through our private real estate program, all with our own money. And let's start with number one. Number one is Elmhurst, New York. Why don't you give us a rundown on Elmhurst?
Really good deal. That deal came in from a finance agent that already had the appraisal and the title in the file.
Nice.
So we were able to close the deal.
Like that.
Yeah, we were able to close this deal in 6 days.
6 days. And it funded in 6 days. That's very fast. I mean, we're getting faster every day, so I like that.
We're very fast, we're very organized, we're very disciplined. What we have that is out of our control is when we order an appraisal or a title work, we're obviously waiting for the appraiser to appraise the property and the title company to come back.
And appraisals take 2 to 4 weeks if it's residential or commercial?
If it's residential, we can usually get them out in about less than 5 days.
5 days now?
5 days if it's not a rural area.
Okay.
If it's a commercial, unfortunately, if we don't have an appraisal on it, we still could be delayed for up to 2 weeks on a commercial deal.
Okay, we try to always do rush appraisals because in general, people want money fast. So, and we accomplished it on this one. So $200,000 loan on a $500,000 property, that's actually a little bit less than a 50% LTV. So what were some of the factors that made it a little bit lower?
It was an easy loan to value for us to put together. The people were pretty good credit. They needed the money. He was in the furniture business and he was able to secure our loan to buy a whole group of wholesale product that he's going to make a lot of money on. So this is where a typical deal is, where they're using the money for a business purpose and they're going to make more money than what they're paying us in fees and rate. So this was a perfect scenario to use.
So he only wanted $200,000. We could have potentially gotten him $250,000 or something like that. But
$300,000 on a deal like that in New York, pretty easy.
Okay, great. And this is considered commercial because that's an apartment complex?
No, they live in one of the units.
They live
thing's not worth $500,000. Just like a little 900 square foot apartment is worth $500,000.
Oh, one unit.
One unit. This is New
York.
Sorry. they're more expensive than us out here in California.
That's hard to believe.
That's right. So it was just one unit. It was about
that makes sense. I don't remember thinking that.
Yeah, about 1,000 square foot. Praised for $500,000. They only wanted to borrow $200,000. We just said yes and gave them the money in 6 days.
Easy peasy. All right, we funded that, so let's ring the bell.
This is my favorite thing to do all day.
We ring a bell in the office every time we fund a deal across all our different funding categories. So, Darren, if you wouldn't mind going to the next example. All right, so our next example is in Colts Neck, New Jersey. Sounds like it's a fun name. This is a nice looking property we got here.
It's a beautiful property. This was closed pretty quick too. We had an appraisal delivered on it, but this one, because of the size of it and where the area was located, we requested another what we call BPO, broker price opinion, go out there to verify the appraisal because the appraiser came in to us from another
appraisal company
that wasn't approved by our company.
So it came in with an appraisal, somewhat recent, but we wanted to validate it. We got a broker price opinion, which is easier, faster than our appraisal.
We closed this deal in less than 7 days, 8 days.
Really? Okay, another fast one.
It was in and out of here in 7, 8 days.
I like the fast one. So this is 12 months, interest only at 12%. And one of the things that's interesting about this one is that it's a business purpose refi of an owner-occupied property. Now, owner-occupied property is not the first thing we want to do. There are specific rules. What are the rules that you have to abide by if you want to get a refi on an owner-occupied property?
If you're going to be using your owner-occupied property for a loan with us, what has to happen is this. 51% of the net proceeds that we give to the borrower must go for the business. So if he owes more than, let's use easy math, let's use $1 million house. And let's say the guy owed $600,000 on the house and he wanted to borrow money. Obviously, he already owes 60% on the house. It wouldn't work. We would have to give a guy on $1 million house $510,000, which must be used, 51% of the loan amount must be used for a business purpose.
All right, so let me walk that back because I think that got a little confusing.
Yeah.
Let's say there's a $1 million property with a mortgage on there of $250,000.
Thank you. That's better.
We come in and we give them a new loan. As you guys know, we don't do second position loans, so we're going to pay off that first loan. And the resulting loan at the end, as you know, can't exceed, say, 65 or 60% loan to value on the property. So the biggest loan we can give them is, let's say $600,000, probably a little bit less. But more of the loan needs to be for business purpose and residential. So in that situation, if you give them $600,000 loan, $200,000 is for personal, $400,000 is for business purpose. That's 66% business purpose. That qualifies. If it was 250, meaning 50-50, wouldn't qualify. It's got to be 51%.
Right on. You said it better than I could have.
Okay. All right. Awesome. Great. So next deal, Indianapolis, Indiana. Got a lot of trees here, so you can't really see the property. But another nice looking property worth $660. Got a $220,000 loan. And this is another business purpose refi. Owner, I think we have three in the last 10 that we did, which is a lot, actually.
It's kind of unusual, to be frank with you. It really is.
Okay. So anything special about this deal that you remember?
You know what? It was a quick close as well, too. I think we closed this in less than 12 or 13 days from what I remember on this particular file. Again, business purpose. They were using the money to buy Farmers Insurance Agency, I believe, or a State Farm agency.
To buy an insurance agency.
They were, right.
Okay,
they were insurance
great.
agents. They were buying either a State Farm or a Farmers agency, and they were using the money for that purpose.
And we get people come in all the time who say, hey, I own my own home. It's worth $500,000. I have a first mortgage on it of about $500,000. So I have $100,000 in equity in it. I put the air quotes up. I mean, it's not true. They have $100,000 in equity. And they want to pull some money out on it. And I'm sorry, it just doesn't work for this, right? As you know, for the numbers, it's just too much. It wouldn't work anyway because that's already an 80% loan to value. We're doing private money loans, private lenders. It's not the same as Fannie Freddie, 30-year repayment. So it just is what it is.
We're doing the unusual and the hard.
All right, so we'd ring the bell every time, but I don't know what happened. We're just going to pass on that. All right, next property. Number 4, East St. Louis. What kind of building is that?
Believe it or not, that's an apartment building, and that's what we call a flop house. And what I mean by that, what I mean by that is this is a property that houses.
It's it's ex-offenders that are
reintegrating back into the community.
A halfway house is another term?
Let's call it a halfway house.
Halfway house.
Halfway house where they rent rooms out.
Okay.
The gentleman on this particular loan, now this is a really tough area in Illinois, outside Chicago. This is in a city called East St. Louis, Illinois, which is a little bit rougher area than we want to really lend a lot in. And this particular guy had bought the property on what they call a land contract, and his contract had expired and he had to pay the loan off.
I say a land contract, it doesn't mean it's the land itself. It's still the building, right?
It's still the building,
okay.
right. It's just called land contract. And what it means is it's basically seller financing in states like Illinois, Michigan.
Mm-hmm.
They call them deed for contract or land contract. And what this guy had, he had a land contract, and his land contract became due. It was the same thing as like a balloon payment coming due, and he had to come in and buy out the land contract.
So if he didn't get it fast, he was going to lose it, and he was able to pick up the property. How much? So the property value is $240. You got him a loan for $100. Was he buying the property for $100? Is that what his contract was, or do you remember?
I don't remember. I don't remember. But there's no way. The property value was $240. He had $100,000 to buy it, but he bought it many years ago under the seller financing agreement. So we did not have a seasoning issue with this particular loan. That's where you're trying to go with.
Yeah, that's one of the things that if people have an option to buy a property, usually it's been around a little while, and usually they're exercising the option because the property value's gone up, sometimes significantly, especially if sometimes you can go up a lot. And if the property value is really much higher, sometimes you can get more than 50 or 60% loan to cost. Like we had a client that had $1 million property, he was able to buy it for $500,000, and in that little bit more of a rare circumstance, he was able to get 100% financing on the loan because it was still 50% on the property.
But that was an exception because the property was such a beautiful property in a well-maintained area.
Right. Okay. So next one, Indianapolis. This is a little bit of a smaller loan for us. We have a real small loan, a couple further down here, but
We got two small ones actually.
Too small. Okay.
Yeah.
So 150
With
is the
trees.
land is the value. 92,000. That's actually relative. That's almost 60 something percent on that, right?
63%.
That's getting up there for what
She
we
paid
do.
150 cash for the house just a few months ago. She wanted to borrow 92,000. I personally felt comfortable with her having close to $60,000 cash into the property. I felt comfortable doing a loan for her. She's using the money she took this loan and is using it on another property to fix up another property that she owns.
Okay, so she bought it cash for 150, and I know we have listed the property value is 150, but did she get a deal and the property is probably worth more?
No. Property pays for about 150, 152.
Okay, all right.
So she paid market value. She didn't steal the property. She paid, what the property was worth. She paid cash for it, and then she came back a couple months later and says, you know what, let me borrow 92,000 on my house so I can go ahead and
Right.
use it for other purposes.
So I see we have a little bit of a higher, so this is another owner-occupied. So wow, it's a small loan and it's owner-occupied. Is that one of the reasons the interest rate's higher? It's
No.
15.95%. That's a little bit on the high side, right?
Okay, rates are going to depend on the credit, even though we will lend where credit's not a factor to us, but we use credit just for pricing, and the smaller loan amount, sometimes the higher the rate. And you'll see that in next couple of slides as we go. You'll see a few of these deals that were a little bit smaller where the rates are higher. So it's really a function of that. So for example, number 6 in Kalamazoo, it's a $35,000 loan. I believe the interest rate is maybe 17 or 18% on it.
Oh, okay. Even more.
Because it's just such a small little loan and the guy's credit was just atrocious. But he was using the money to buy out. There was a blanket on both properties.
There's another purchase option, right?
It was another purchase, not option, but it was another purchase to pay off his land contract in the state of Michigan.
Okay, so this is a blanket lien on 2 properties. That's one of the reasons why, if you look at this one, the property value may seem, you may be thinking that's way less than 50%, but really it was a loan on 1 property. We added a second property to make sure there's plenty of value there, right?
Yes, sir.
Okay. All right, well that one, that's an interesting one. Okay, Memphis, Tennessee. This is a daycare facility.
It is.
Right?
Mrs. KC is her name. And if she's listening, I want my payment, lady. I'm just kidding. I shouldn't say that on live TV.
All right.
This was a daycare clinic that we made a loan to. Properties were $220, praised for $220. We gave her $120,000 first mortgage.
Looks like it could be a church or something.
Yeah, no, it's definitely daycare in Tennessee. She's using the money to pay off existing loan and existing debt, and she's paid well.
She had back property taxes, right? That was one of the things
and she
for
had
this
back
one.
property taxes, and she's into us now for 2 months.
Really?
Made
2
this
months
loan
behind?
Made this loan about 60 days ago. She still owes us for this month, so we're chasing her.
Okay. All right. We have a question. Stan is asking, can the owner live at the property? And that's one of the things we've been talking about. If you've been listening, we've been able to do some owner-occupied properties as long as the final loan, at least 51% of the loan is for business purpose. And of course, that whole loan needs to be less than 50-60% loan to value, depending on what type of property it is. All right, so next, moving on after this one, Inkster. Inkster, Michigan?
Michigan.
All right,
Another
man.
one.
We got a lot of states that start with M.
Yeah,
Missouri, Michigan, Mississippi.
Yeah.
Okay.
Montana.
So this one, that property is $75,000. It's got a nice kitchen, decent property, man. A lot cheaper than California.
A lot cheaper than California. This is actually an assisted living property. It's a single-family home.
That's an assisted living
That's
property.
been converted to an assisted living facility.
So what does that mean? There's one family, one couple or something that lives there, or they got lots of them?
Yeah, about 6 old people you could put in that place.
6 different tenants they can have. Is it 6 bedrooms?
No, you put 2 in one room.
Okay, that's a small house.
Each state has different laws for assisted living or board and care. You guys may have heard of assisted living or board and care. This is considered to be an assisted living home in Inkster, Michigan that's licensed. And each state has a specific rule of how many square feet you need per patient. So on a typical bedroom, which is maybe 175 square feet, 90 and 90, you can get 2 patients in that room. So there's a total of 6 people living in this house. And it brings in a tremendous amount of money, and we just felt pretty comfortable at $43,000 against $75,000.
Yeah, right. That's over 50% because 35 would have been, 37.
37 and a half.
Okay. All right. 12 months interest only for business expansion. So what were they doing? What was the business expansion? Was it related costs or?
Related costs to this particular property.
Okay, great. All right, Richton Park, $265,000 value, $162,000 loan, 12 months interest only, 13.9. Anything interesting? They use the money to pay off credit cards, huh?
Right. This is a non-owner-occupied home that they own as a rental. So we were able to use this money to pay off credit cards if they wanted to. If it's a rental property, you can do whatever you want with the money.
Right.
If it's an owner-occupied property that you live in, it must be business purpose.
And this just goes to show, I know a lot of people think 13.9%, that's a lot for a mortgage, but it's not if you're at a default rate of 29% on your credit cards because you missed one payment and they bumped you to default rate. So we're saving her a ton of money. I say her, I don't know if it's a he or her. Whoever that is, we're saving them a ton of money on their interest by paying off the credit cards. And I think they were behind on the mortgage. Is that right?
Not on this case.
Not in this one. They're just paying off the old mortgage, paying off other debt. All right. Frank is asking, we will be submitting the $3 million property today. Awesome. Okay. All right. We have a lot of interesting properties coming up, I've noticed. We have another one where we're looking at, it's a blanket lien across. What's the one that Mike was talking about? It was
We're doing 11, a blanket lien for about
11 properties?
No. I think it was 27 properties.
27 properties.
27 properties.
Okay.
We're going to do a blanket lien against 27 properties.
Starts to get a little complex when you're dealing with 27 properties.
We're smart. We can handle it. We like challenges.
All right, so here is one. This last one is one that it's actually, okay, he's signed and it funds today.
By 3 o'clock today.
Okay, so Frank's talking about a $3 million property. Here's another one that he's already signed. This one was really fast, and it says close in 14 days. It would have been faster, but we had some legal delays. It's Wednesday we're doing this. The client paid for loan docs last Wednesday, and something weird happened, and the attorneys took
3 days.
It felt like more. Poor guy drove 100 miles twice to sign the loan documents because he was motivated. But anyway, it got done, and it's a good deal, right? Closed fast, beautiful property, right? $3 million property.
In Thayer, Missouri.
Which, I mean, is that remote? Where's Thayer?
It's about as remote as you can get in Missouri.
So that's why that's a monster of a property, right?
Yeah, it's about 8,000 square feet, plus there's a winery on it.
Really? Wow. Okay. That's pretty sweet. All right. So $1.2 million loan. Cool. Anything else interesting about that one? The
really
winery's
not.
Pretty cool.
You know, the winery's neat on it. The guy's a pretty good guy. He's a developer, so he understands borrowing money. He understands construction. He understands loans. And,
great.
You know, we've just been really moving them a lot quickly. Our systems are much, much quicker and much faster than what they've been recently. So as long as we have a motivated borrower, I mean, we're just really starting to move these things through our system a lot quicker.
Great. Awesome. Well, that's it for all the loans. If anybody has any scenarios or whatever, go ahead and put it in the box. We'll sort of chat for a second until that's done. Any scenario at all, put it in the chat box and we'll answer it to them. You know, some of the reasons that we've been able to start moving deals faster is we're starting to get investors into the fund. So if you've been watching our show, David is with Lendterra. This is the mortgage origination private real estate company. We're funding deals on our warehouse line, and we've created a long-term investment fund that's buying the deals off of the line.
Right.
So we're getting our first investors in there. You may have seen the show. It's earn11.com, American Mortgage Fund. If you're watching this and you're a accredited investor and you're looking for a way to earn 11% on your money, go sign up. You might be able to buy some of these deals that you just saw. Right? These are the exact deals that you're going to see on the line. I don't see any scenarios coming in, so I guess we'll go ahead and wrap it up for the day. Thank you, David, for what Darren's pointing at the screen.
Oh.
Okay. Again, if you're new to the show, subscribe. Your subscriptions and likes help us do this for more people. David, thank you for coming on the show. Thank you all for your attention. And it's Pi Day. Oh, Rhoda, yeah.
Oh,
okay,
no.
Today is March. Wait, no.
Yes!
I didn't know that's what Pi Day meant. Okay, that just happened. Darren is really freaked out about the microphone. Pi Day. All right. Didn't know that was coming.
Thank you for having me.
All right, we're
Before
done.
fireworks start.
Golly.
Happy Pi Day.
Thanks.
Oh, I saw that coming. I'm like, fuck.
Yeah, you did. I was like, she's not going to throw the pie at you, David. That's what I was thinking. And he was right.